Welcome back. It's Friday, Finance Fridays, and I'm your host, Anthony, with InTouch Mortgage Solutions. And on this week's episode, I want to take a quick opportunity, go over the transfer from Toronto, going from a seller's market into a buyer's market, what it means for buyers, what it means for sellers as interest rates begin to rise. This is obviously going to have a big hand to play in the direction of real estate prices. There's no argument that as interest rates continue to rise, as we see these bond yields in the US continue to surge, these treasuries as a result of higher government spending, potential recessions, obviously what is happening with the Federal Reserve, will they raise interest rates? There's a lot of questions that are impacting the yields, which in turn obviously impact the Canada 5-year Bank of Canada bond. And the 5-year Bank of Canada bond, as you recall, is pretty much the barometer for 5-year fixed rate mortgages in Canada, which generally were the most popular product. So as most Canadians look to their mortgages for their renewals as they're about to come up, we have hundreds of thousands of mortgages that are about to renew in the coming years, billions and billions of dollars that are about to reset with these financial institutions. The question becomes of how much longer can a lot of these individuals hold on for? And we're getting that conversation now as we're seeing inventory levels pick up in Toronto. Why are these inventory levels picking up? What's causing these inventory levels to accelerate, right? Is it because of individuals that are selling their homes for a buy and sell transaction? Are they family members or grandparents or parents that passed away and they're selling the home? Is it investors that have basically shortfalled on these investment properties are now looking to cash out because they can't do it? Or is it individuals that got their mortgage renewals with private lenders that can't afford those new payments and are having no choice but to sell, right? The conversations are endless. The possibilities are absolutely endless on why individuals are selling, right? Some of them could be anticipatory in the sense is that, hey, we're not able to make ends meet here. We see that our mortgage renewal is going to be coming up in the next little while. We just already finding it difficult to make this mortgage payment now with the higher cost of living. We might as well sell, get ahead of it, move maybe somewhere where it's a little bit more affordable. So these conversations are happening day to day. We hear every single day with these conversations, but there is the conversation around the buyer, right? So these buyers are seeing this. Maybe they're not fully comprehending what's happening behind closed doors, but we have sellers that are thinking, hey, I'm not in a financial distress. I don't need to sell right away, so I might pull the home off the market. Some of them are saying, hey, I'm expecting this amount because so-and-so down the street just sold a few months ago for that price. I should be getting the same. And obviously having that conversation about expectations are very, very important. And buyers are just coming to the table saying, I'm not paying what that guy paid 3 months ago or 4 months ago. This is what we're offering. So the difference between the buy and the sell market are obviously very, very important. As a seller in a buyer's market, you have to be prepared for some changes and expectations. You might not get a firm offer. You may not get multiples. You may not have bidding wars. It all depends on your property, what's listed at, obviously having that conversation with your realtor. As a buyer, you're able to potentially add in conditions that are in your favor, such as a condition of financing, that ability for a lawyer review, home inspection. You're able to put in some conditions that might benefit you, especially if you have a home and you're looking to make a move. You want to sell your home and buy, but you want to lock it in. So there are obviously some situations, but regardless if you're on the sell, you're on the buy side, interest rates are playing a very big role in decisions for people to either sell their home or not to buy right now, right? So this is why it's very important. And a lot of economists, a lot of analysts are saying, like, if interest rates do not come down from these highs that we're seeing right now, and this is very, very important. If interest rates remain elevated for longer, not many Canadians can hold on. We have abundance of articles pointing to individuals, are showing that their savings accounts are dwindling away. They're living paycheck to paycheck. Everything costs more. These fixed rate mortgages are not making life easier. So you have buyers that potentially are looking at the situation saying, I can't afford to buy right now because interest rates are too high. I can't afford to buy because home prices are still too high. And that's the data that's sort of coming out from Zoocasa. And when you look at these surveys, you look at how are they getting approved, right? They're getting help from family members. They're potentially maybe sellers that have sold, put the money in their pocket. Maybe they were renting. Maybe they have, maybe they have very wealthy families that are able to give them a huge amount of a down payment. But regardless, there's still a lot of them pushing the decision to buy onto this back burner. And the only clients that we've been working with, to be honest, that we see are going out there and buying right now are either individuals that are cash buyers, that they don't need a mortgage, they're just going out there, they sold their home, they're going out there and they're buying cash, or they're individuals that, as I said, are already pre-approved, have a good rate, they want to execute on that before it gets, before it matures, before it expires. So, but obviously interest rates play into this entire market. It should come as no surprise that as interest rates begin to rise, home prices will come down. And if interest rates drop, well, guess what? The inverse happens. Interest rates drop, home prices tend to go up because more and more people will get out into the market. Will that end up happening? Obviously, with the Bank of Canada meeting on the 25th, what will happen with the interest rate announcement? A lot of talk around right now as we talked about the bonds, those yields going up. One important notation is that if we continue to see these fixed rate mortgages rise to these levels, will the Bank of Canada say, hey, fixed rate mortgages are up, our policy rate is high, we might be able to hold back and just sit back and watch for another month or two to see exactly what happens, because a lot of these fixed rate mortgages, because they're higher, they are tightening. They're already tightening on Canadian budgets, Canadian finances on those households, because of the fact that you think that interest rates are high, that's less disposable income at the end of the month, right? Less disposable income, less ability for people to want to go and borrow. You're not going to be financing a new car at 8%, right? You're not going to be taking on further debt when interest rates are high. So the government sees these bond yields as potentially helping them have to avoid increasing rates in October. But we are hearing this conversation basically across the board. I think it's a valid conversation. I personally think if interest rates on the fixed side are elevated, we have policy rate that's elevated, we have contraction in GDP, we have basically consumer pullback, we have a whole bunch of inventory hitting the market right now in Toronto and other parts of the country, and buyers that are not jumping into the market. We have lower credit creation, lower mortgages, like in the sense of creation. There are not many people applying for mortgages as they were a few years ago, that the Bank of Canada might be able to look at that data and say, hey, you know what, maybe we're going to hold off right now, but at the end, we all have to look at interest rates. If interest rates stay high for longer, real estate prices will drop. What do you think will happen? Let us know in the comments sections below. So before we leave the video here, I just want to remind everyone that if you're watching and you have not yet subscribed to the channel, please do us a favor, hit the notification bell, smash the like button, leave a comment in the comment section below. It helps the YouTube algorithm, helps us get this content out to as many Canadians as possible. But we'll leave the video here, wishing everyone a wonderful Friday and an even better weekend ahead. Thanks for clicking. Thanks for watching.